In terms of this delisting, China Mobile, China Unicom saying, well, we haven't heard anything from the NYSE just yet. But as we step back, this process that's starting at the New York Stock Exchange in the U.S., does it concern you about the health of the Chinese stock market overall because it puts more focus on deteriorated U.S.-China relations?
Yeah, well, it is not a sort of a happy scenario, want to see at the beginning of the year. But then at the same time, if you look at the structure of these firms, they are partly government-owned, but then, they are the relics of the SOE reform from the early 2000s. Right, so they put these firms on the stock market, just to show that the government has the resolve to reform the state-owned sector. So I think that was the historical background for these companies. And I think, till now, even though they're still, one of the largest firms in China, but in terms of market cap, they're way overtaken by, some of the internet companies that we've seen lately. And many of them actually drop out of top 10. So telecom sector is actually a very small sector within the overall index. And I think the oil major index rate is slipping as well. So I would say that it is not an ideal scenario, but then at the same time, these companies have passed their prime, and they are really the relics of the SOE reform in the early 2000s.
So when we look at what will be the big positive driving factor, because I know you're very positive on Chinese stocks, is it going to be the force that really started the rally going in 2020, which is that China went into the virus first, handled it well, first out, recovery, you can quibble about just how strong it is, but nevertheless, positive growth. Is that what you're counting on for this bullish scenario in Chinese stocks this year?
Yeah, I think, China has been managing the virus relatively well compared with the other countries. So, even though we still have sporadic cases here and there, but then overall, I think the production is in full force in this country. So I wouldn't be surprised to see in the first half of next year, the recovery strength would be even better than expected. And I think if the virus vaccination is going well with the rest of the world, then I think the global will be entering into a strong recovery mode. But then that is on the premise that a virus doesn't sort of coming with another surprise to us. So I think, specifically in terms of those Chinese companies, even though they are, some of the oldest listed Chinese companies, the valuation on these companies are very, very low. They're very low single-digit PE, and they're giving you 7% yield. For example, China Mobile is giving you 7% dividend yield. So they are really valuable plays in the stock market. So I think the U.S. investors may not be able to buy them anymore, but then they can sell them onto the Hong Kong market, and then someone based in Hong Kong and Asia will be able to pick it up at a cheaper price. So I think the scenario isn't ideal, but then at the same time, I wouldn't be surprised to see someone would be more than willing to pick them up on the cheap.
I'm glad you talk about value and this concept of cheapness, right? How do you quantify value, and what is the value opportunity for you in Chinese markets at the moment? Do you still quantify it using traditional valuation metrics even?
Yeah, I think value is an intangible concept. I think in the past decade we've seen many internet platform Chinese companies created lots of value for shareholders, but at the same time, those things that have been selling on cheap valuation has been getting cheaper. So I think at this point, at this stage of the cycle, for some reason, value tends to coincide with cyclical names. These names have been sold down for years and years. Many of them has been trading on a single-digit PE, but then since the middle of 2020, they had a really good, strong technical rebound. I'm just waiting to see, whether this technical rebound can sort of morph into a much more sustainable trend in which the cyclical sectors get to outperform the other growth sectors based on the back of a strong recovery. So I'm waiting to see that. Normally in the first quarter of the year, there tend to be a very strong seasonal effect that favor cyclical sectors. So I wouldn't be surprised to see they extend the strengths into this quarter based on the seasonality and also based on the hope for a strong economic recovery.
What kind of year is it going to be for Chinese e-commerce, fintech, payments as we continue to watch what happens with Ant, what happens with Alibaba, the implications on new rules for the likes of JD.com and other competitors as well? Is this ultimately a sector that you expect will come out, I guess, even more resilient with the streamlining?
I would say, these companies have proven themselves, especially during the during the worst part of the virus outbreak. These companies were still able to grow their earnings and also cash flow for shareholders. I think they have laid out a sort of a very strong platform within the marketplace that makes them very difficult to compete with. So I wouldn't be surprised to see these companies continue to grow very strongly. But then at the same time, because they have grown so big, they have amassed tremendous market power that needs to be checked. So I think the regulators are dealing with that. But I think the purpose of the regulation is not to sort of ruin these companies, but rather to help the smaller part of the economy to be able to better use these platforms to sort of build a better economy. So I would say that, for now, there are some uncertainties overhanging these companies, because they're under the circumspection of the regulation. But then at the same time, I think in the next couple of years, I wouldn't be surprised to see them continue to grow very strongly after this probe.